All right, let's talk about one of the most watched earnings reports of the entire year, Nvidia. They just dropped a completely blockbuster quarter, but the market's first move was, well, a little weird. Let's get into it.
So this is the big question, right? This is the puzzle we're going to solve today. Nvidia comes out with numbers that just crush every single expectation, and yet the stock immediately drops. So what gives? To figure that out, we first have to understand just how insanely good the good news really was. Okay, let's just start with this number, 73%. That's a 73% jump in revenue from the same time last year. Now, for a company this massive, that kind of growth it's almost unheard of. It's like strapping a rocket to a skyscraper.
And then there's this. The market opens and the stock goes down about 5%. So you've got this unbelievable, record-breaking growth on one side and a falling stock price on the other. See, it doesn't quite add up. And that's exactly what we're here to unpack.
Okay, so first things first, let's dive deep into the numbers themselves. And let me tell you, calling this quarter good is probably the understatement of the year. These weren't just good numbers. This was a statement.
So here's the main event, $68.1 billion. That's their revenue for just one quarter. Now, to put that in perspective, Wall Street was hoping for, maybe $65.5 billion. Nvidia didn't just clear the bar, they launched themselves into orbit over it.
And this chart just shows you how wild the acceleration has been. I mean, look at that. The revenue isn't just growing, it's growing faster and faster, going from about $39 billion just 1 year ago to over $68 billion today. That is just breathtaking stuff.
And it wasn't just about the total sales either. The strength was everywhere. I mean, look at this table. Net income, that's the actual profit they keep. It almost doubled, up 94%. Earnings per share, up 98%. It's like every single part of the engine is firing perfectly.
And just when you think, wow, that's amazing, they tell you what's coming next. Get this, the company is guiding for $78 billion in revenue for the next quarter. That didn't just beat what the analysts were expecting, it smashed what even the biggest bulls were secretly hoping for. So the takeaway is simple. Performance was historic and the outlook is somehow even better.
So, we've established the numbers are absolutely phenomenal. The question is, why? What's actually powering this incredible growth engine? Well, let's take a look under the hood.
Here is your answer all in one picture. Just look at that huge blue slice of the pie. Over 91% of Nvidia's revenue, it's coming from their data center business. This isn't just part of their company anymore. For all intents and purposes, it is the company. And the data center business is really just another word for AI.
Think about it. Every single major tech company on the planet is in an absolute frenzy right now, a race to build out their AI infrastructure. And what's the one thing they all need? What's the backbone of this whole AI revolution? It's GPU-accelerated computing. Nvidia essentially created this market, and they still completely dominate it.
Okay, so this brings us right back to that initial stock dip and the $1 million or $1 trillion question. With the price having gone up so much already, is the company actually overvalued? Is all this amazing news already baked into the stock price? Let's see what the data says.
So real quick, let's just touch on the most common way to value a stock, the PE ratio. It's basically just a simple way of asking for every $1 the company earns in profit, how many dollars am I willing to pay for the stock? So a higher number usually means the stock is more expensive. And this is where things get really, really interesting. So based on its insane earnings, Nvidia's PE ratio is sitting around 37. Now look at its competitors. Their average PE is over 88. Even the whole industry average is higher. So what this tells us is that even with its huge stock price, Nvidia actually looks like a better value than its peers because its profits are just that massive.
And the story gets even better. The PEG ratio, which factors in that crazy growth rate, is at 0.8. And basically, anything under 1 is often considered a bargain. A return on equity over 100%? That's just wild. I mean, incredibly efficient. And to top it all off, its financial health gets a rating of excellent. So the bottom line is, when you actually look at the metrics, the valuation looks surprisingly solid.
Okay, so the performance is historic, the valuation looks pretty reasonable. What's the final piece of the puzzle? What does Wall Street think? Let's check out what the pros are saying about what comes next.
Well, the verdict is in, and it's pretty darn clear. You've got a strong buy rating across the board. A whopping 95% of analysts are telling their clients to buy the stock. And right after these earnings came out, at least 11 of them rushed to raise their future predictions for the company even higher.
And they're putting their money where their mouth is.
Just look at these price targets from the biggest names on the street. We're seeing targets of $250, $300, even $310 a share. All of those numbers suggest there's still a lot of room to run, even after the massive rally we've already seen.
And this quote from the CEO, Jensen Huang, just nails the big picture vision. He's not just selling computer chips. He sees Nvidia as building the actual factories for an entirely new industrial revolution powered by AI. I mean, that's the kind of massive opportunity they think they're tackling.
So let's circle all the way back to that first question. Why did the stock dip? Well, the most likely answer is just some short-term noise, people taking profits after a huge run-up. But when you look past that little blip, when you see the incredible numbers, the blowout guidance, the solid valuation, and the unified roar of approval from Wall Street, you start to ask a totally different question. Was that dip just the stock catching its breath before the next giant leap forward? From where I'm sitting, that seems to be the real question now.